The source of the market crash was someone was either manipulating or attacking poorly designed oracles on Binance. All of the large DeFi systems were pretty flawless. Overall, I think it reinforced the move from CeFi to DeFi.
Gold is just thriving right now. Just within a week, it added the entire market cap of Bitcoin, which is pretty impressive.
The narrative I see on Twitter seems to be dollar debasement. I think it's just fiat debasement because other central banks around the world are doing the same thing that the US is doing.
It's always dangerous to say that this time is different, but this cycle feels different. Do you think we just have to forget and just believe in the this time is different meme?
You know, I've always hated the 4-year cycle because the world is not that simple. We're just going to take all of the assets that trade on Wall Street today and trade them on chain. Solana ETFs today are effectively zero. That will change very soon.
Major institutions launching Ethereum Layer 2s, for instance. Just recently, Ant Group and Alipay. We have Robinhood announcing a Layer 2.
I do think we will see a lot of high-profile failures. Sony's L2, as far as I can tell, is a total flop. People need to make mistakes and then they'll stop. I hope Ant Group tries to put all of their users on their L2. 100% probability the system is going to fall over and fail and the gas fees are going to spike and the system is going to be unusable. I'm really looking forward to that happening. I think that will be the greatest marketing event in the history of Solana.
Welcome to the Verified podcast by Bitcoin Suisse, your backstage pass to the world of crypto. We host some of the biggest names in digital assets to cover the latest trends and share insights not only for your entertainment, but for the love of the industry. None of the discussed is financial advice, of course. It's all for informational and entertainment purposes only. So sit back, relax, and let's dive in.
Welcome back to Verified. Today we are joined by Kyle Samani. He's managing partner at Multicoin Capital. Also recently became chairman of Forward Industry. So somewhat the Tom Lee or Michael Saylor of Solana, which is the largest Solana DAT. Kyle is known in the industry for spotting non-consensus structural shifts and trends. And he's also notorious to reason by analogy, right?
I love analogies.
In today's conversation, we'll explore how Multicoin is positioning amid like shifting venture landscape. We dive into internet crypto capital markets and also into macro and crypto markets in general. Co-hosting today with me is Luca. And with that, welcome, Kyle.
Hey guys, good morning. Thanks for having me on the show. Excited to be here, Dominic, Luca. Let's kick things off.
Yeah, sure. Very excited. So we start a little bit. I think it's still hot enough to revisit with the recent Black Friday. Crypto markets remain still in shaky territory. Somehow they did not really manage to truly recover, to truly rebound, despite if you check traditional markets, they are doing quite well. If you check gold, it does tremendously well. Like we're having a huge gold rush right now. In my view, I feel like the government shutdown moved the market into somewhat more uncertain territory. And then China basically weaponizing rare earths was somewhat the nail in the coffin. If we look a little bit from the macro angle, Kyle, how do you explain the current weakness in crypto markets? Do we just need some time to digest what happened, also like what happened on chain? Do you think there's a contagion risk similar to what we experienced in FTX and therefore there's some more market uncertainty? What's your take on why we don't fully rebound yet?
Yeah, guys, thanks for having me here. I'm certainly not a macro expert, but I think there's some unease in private credit and some other markets, and so I think people are probably the people who made gains last Friday, the shorts, probably a little more reticent to plow that money right back into the market. As you said, there's a lot of uncertainty right now, Trump, China, all these things. I'm generally an optimist. I generally think both sides want to get to a good deal. And obviously there's a lot of posturing between here and there. So I think it's kind of to be expected, but I think both sides know not getting to a deal is pretty catastrophic.
Yeah, for sure. Looking back at last Friday, I mean, the news basically came out after the traditional markets closed. Crypto was still open. And then, I mean, I personally was at a dinner with friends. They're all into crypto. Dominic was also there. And then we saw certain altcoins trading down 50%, 70% within like half an hour, 20 billion were liquidated, hyper liquid, and lighter open interest was basically cut in half. What would you say does this event mean for crypto markets generally?
I mean, I think generally the decentralized venues performed better than the centralized ones. It seems like the source of the market crash was basically someone was either manipulating or attacking um, poorly designed oracles on Binance around the USDE price in Athena. Um, and I think this kind of goes to show you the fragility of CeFi. DeFi was performed much better. Even like people call out hyperliquid for the ADLs. I mean, to the best of my knowledge, you have to have ADLs as a backstop, otherwise you end up with insolvency. So the system designed as advertised and functioned as expected. So you can complain about the system design, but like the system operated as intended. Same was true on all of the other major DeFi derivatives exchanges as well as borrow lend systems. Camino 0 bad debt, Aave 0 bad debt. Lighter, I mean, Lighter went down. I think they I think like whatever, too much traffic or something. But like, look, Lighter's been live for like 2 weeks, so I don't know. I don't want to judge too hard. All of the large DeFi systems were pretty flawless. So overall, I think it reinforced the move from CeFi to DeFi.
I mean, we also see this if you check volumes in terms of Dex to Sex ratio, on-chain perps and other markets continue to eat into like the centralized brothers and sisters kind of. How do you see the competitive landscape recently evolving around Perpetual Dexes in particular? We know Hyperliquid is super successful also in terms of an investment case because they distribute a lot of revenue. We saw Binance basically showing up with a competitor trying to kind of somewhat cannibalize Hyperliquid's success. And then obviously we have a lot of really powerful perps on Solana as well. I'm wondering like what does the end game look like to you, especially since you're such in terms of vision leaning so much into internet capital markets, so perps will play a major role.
Yeah, I think perps are obviously like the kind of the first principles correct way to trade with leverage for derivatives. I think over the next decade, we'll see perps displace most dated futures. For commodities, that there probably will remain dated futures, but I think perps will become the dominant form of leverage over the next decade across all capital markets and all jurisdictions and all asset classes because their construction is so elegant and simple. And I think a lot of that is going to take place on permissionless rails because what we see time and time again is the permissionless public systems are actually the most resilient. And yeah, again, DeFi performed better than CeFi through this the last week. So I'm pretty optimistic that will remain the case moving forward and people will come to appreciate that.
I guess that's for sure one of the headlines that on-chain felt like more robust than off-chain. If you had to pick a winner, or where do you think the most successful, most volume perp will materialize?
On the on-chain stuff, I think it's going to end up being one of the Solana-based perp dexes. I don't know which one. Obviously, we are a big owner of Drift. There's a handful of other ones coming out fairly soon by very credible teams. So we'll see how that competition shakes out. But I think the market microstructure on Solana will ultimately be better than what any CeFi venue can provide, or Hyperliquid, which Hyperliquid really is CeFi, although it calls itself DeFi. But being able to have a controlled execution as well as multiple concurrent leaders combined with this kind of new prop AMM mechanism that's become quite popular, I believe is ultimately going to produce tighter spreads, more liquidity than anything that has ever existed in capital markets history. So very, very excited to see those perp dexes take advantage of all of those realities on Solana.
Okay, fair. I would just like, if you don't mind, zoom out a little bit again. I know you mentioned you're not the macro wizard, but still, I bet you have a view on the current dynamics. I highlighted it earlier, like gold is having this like weird or major gold rush right now. I think it crossed the 30 trillion mark as the first asset ever. just within a week, it added basically the entire market cap of Bitcoin, which is pretty impressive, especially since we always think like the bigger or the higher the market cap is, the more complex it is to move, like in terms of inertia of an asset. But still, gold is just thriving right now. And I'm wondering, like, how does it link to Bitcoin, since the narrative is like Bitcoin, it's a digital twin. Will Bitcoin benefit at some point?
Yeah, I mean, I think it's pretty clear. I mean, gold has added trillions in market cap. So when something moves with that much size, obviously there's a lot of buyers, and the thesis for gold has been the same for 5,000 years, which is, dollar debasement, fiat debasement, whatever. So obviously people are concerned about fiat debasement. The narrative I see on Twitter seems to be dollar debasement. I actually think that is incomplete. I think it's just fiat debasement because the other central banks around the world are doing the same thing that the US is doing. So I don't really think it's a flight from dollars as much as it is a flight from fiat. The first part of your question was, will Bitcoin catch up? And yeah, the answer is inevitably yes. When? No idea. Could be next week, could be in 7 years. Like I think both are on the table, but eventually the world will go to Bitcoin from gold for this purpose.
Okay, interesting. Just quickly to touch on this, you've been part of the crypto space for a long time as well. And I mean, we see everyone talking about the crypto cycles, the halving cycle. It's always dangerous to say that this time is different, but this cycle kind of feels different. It has felt different from the beginning, with the new all-time high before the halving, the institutional adoptions with the ETFs. Just the whole price action is a lot different. Do you think we just have to forget the whole 4-year halving cycle thesis and just believe in the this time is different meme, kind of?
I've always hated the 4-year cycle because it's the world is not that simple. And like believing the world is that simple is like obviously a logical fallacy. Now there's a lot of crypto people who do believe in the 4-year cycle, and that may turn out to be reflexively true. It can be a self-fulfilling prophecy. So on the table, this time is different in that like the prior cycles, quite frankly, had not much substance. And this time there is substance. We can see these DeFi systems. We can see these deep in applications. And we can see, a lot of leading people from Wall Street, from all sides, from the asset management side, most notably BlackRock, from the trading side, obviously Jump, but basically all of the HFTs. And on the brokerage side, you see Robinhood now, right? And then obviously Stripe on the payment side. You're seeing all of the major players around the world, basically embracing this and saying, hey, it's time to move forward with this. So this time is different. That doesn't preclude the 4-year cycle from happening, but I think over-indexing on the 4-year cycle is a far too simplistic way to think about the world.
Yeah, I agree.
Yeah, same. I'm sharing that view, especially since you have these like diminishing effects of the halving itself. We know Bitcoin and crypto is a risk-on asset class. It's kind of liquidity sponge. So if liquidity goes up, usually crypto as well. Let's dive into internet capital markets. I think that's something that you quite heavily lean into. I truly believe you framed it very elegantly in highlighting how today's capital markets that we are all familiar with, that they were basically induced by a huge stock market crisis in the 1930s, which basically led to the financial system as we know, including all of these, like, let's say, annoying intermediaries, all of these rent-seeking entities that make all of our interactions within finance more costly. Now we are at this like pristine point in time where tech and regulation kind of align for the first time, to your words, since the last 100 years, which brings a huge opportunity because now on the tech side, we have blockchains that can actually scale, obviously including Solana, but also the regulatory side, especially now with the new Trump administration being like very, very pro-crypto. you can't overstate the fact on how pro-crypto they are if you check the recent regulation and legislation improvements, including Genius Act, Project Crypto from Atkins, the Clarity Act, which is upcoming. I'm wondering, like in your vision, how does this internet capital market in the best way look like? This would be the first question, and the second one is there an angle in finally you are dealing a lot with that fact in venture investing, because once you invest in one of these projects, you always deal with SAFTs and safes, which is weird. You still have no legal claim when you hold the token, for instance, in many instances. So is there a future where the tokens and maybe securities somewhat blend together and I have more like an equity like ownership in holding the token?
Let me start with your second question and then go back to the first. Yeah, I think over time, probably tokens start to gain more features that look more like traditional equity. Um, and you already kind of see this happening today with the governance systems that many tokens, do have. Uh, and I actually kind of like that you have, uh, there's like this interesting dynamic between what the core team wants, what the token holders want. Those things can be in tension with one another. And I kind of like the current configuration. We could have more protections for investors and token holders, and I think we'll get there. Unfortunately, our history with securities laws in the United States, thanks to Mr. Gensler, people are a little shy and burned around that stuff. But I do think over time we will get to a middle ground that is healthier for teams and token holders. And I think that all happens after. I think the big unlock for that's going to be the Clarity Act, which fingers crossed will pass here in the next couple months. In terms of your first question of like how do I think about the vision of internet capital markets, I think about the internet capital markets kind of through two distinct lenses. The first lens is actually kind of the simpler and more boring lens, which is we're just going to take all of the assets that trade on Wall Street today and trade them on chain. SEC Chair Paul Atkins gave a speech on July 31st called Project Crypto. And in that speech, he said unequivocally, we are moving U.S. securities markets on chain. Yep. I encourage you to read the speech, Google it. It's a 5-minute read. I think that's the first part of internet capital markets, is just getting the benefits of permissionless blockchains for Apple, Google, FX, commodities, whatever, all of the stuff that already is in financial markets. Obviously, these things become 24/7. They're global, permissionless access, tap into DeFi, you get all those cool features for trading, those assets. The second angle of internet capital markets, and this is the one that I kind of personally find more exciting, is basically thinking about finance as an internet native primitive for really the first time in the history of the internet. And what I mean by that is, like, for the last 35 years of the internet, finance, you always had to go to some sort of dedicated finance portal to do finance. That started off with E-Trade or Scottrade or whatever, or TD Ameritrade back in the day. That now is still true on Robinhood. That you obviously now go to Coinbase or even Phantom for that matter as a crypto wallet. And what I mean is all of these, like, your homepage is a portfolio and there's a search box and you type in the ticker or the contract address of whatever you're searching for, and you go to the asset page and there's a price chart on the asset page and there's a buy and sell button, right? And like that paradigm, UX paradigm, has been the only UX paradigm for accessing finance for the last 35 years. And like shockingly has not changed at all. And I don't think that paradigm goes away. But what I like to highlight is that we are now starting to see the first instances of bringing finance into contexts that do not look like the one that I just described. The first real example of that was the Telegram bots, actually, from about 2 years ago. I believe they launched summer of 23, if I'm not mistaken. And the Telegram bots were the first time you could trade really any asset in something that did not look like Phantom or Coinbase or Robinhood. And that was a pretty big breakthrough in user experience. We've seen evolutions of that now with PvP, and obviously there's whatever 20, 30, 40, 50 Telegram bots out there these days. Unfortunately, the APIs for iMessage, WhatsApp, and Telegram, I think still limit a lot what those systems could become. But I'm optimistic that those APIs will become better in the coming years. So that's been the first instance of that. I generally think we're going to start to see trading overlaid on top of media in a pretty big way. The obvious example here would be if you're on the Wall Street Journal reading about interest rates in the Federal Reserve, obviously there should be not a screenshot of the Kalshi market at the top. There should be an actual live interactive widget at the top, and there should be a buy and a sell button, right on the top of the article. And I think that's coming pretty soon. Obviously, if you're on Yahoo Sports or CBS Sports reading about a sports game, there should be a buy and a sell button for who's going to win the game. Like, obviously, right? If you're listening to the All In podcast and they're talking about a stock, there should be a buy and a sell button for that stock, like overlaid on top of the YouTube video. And so I think you're about to start. I think you're going to see this intersection of media and finance in a way that really wasn't possible before. So that's all coming soon. And then obviously the other like very fun place you see this happening today that's live now is Pump, actually, with all the live streamers. And like live streaming and trading was not a thing until a year ago. And, unclear if that has, I don't know. I don't think it's truly broken out yet, but the Pump team have incredible product instincts, and it feels like there's something there. And I think most people in crypto feel like there's something there. And most people who run a podcast for a living feel like there's something there. So I'm pretty optimistic someone's going to crack the code.
That's interesting, because I was also checking the data and basically user retention. It's quite sticky, surprisingly sticky. And obviously for prediction markets, it's probably, like as you outlined, one of the biggest things. I know you have exposure to Kalshi, but I think there was also one kind of initiative where they wanted to integrate Polymarket, I think, into Twitter, but I'm not sure what happened with that. But diving a little bit more into the tech side of these internet capital markets vision, I mean, just now we needed scalable blockchains basically to even unlock this, right? And nowadays I feel like, and I bet you agree, we are like entering that point in time where we actually deal with scalable blockchains. We have like Solana, where you're a major fan of, with their like super crisp fee markets and so forth. They just recently proved again that they can handle a major demand influx during Black Friday. There's also 00 now, which is somewhat like dedicated fiber, a crypto internet, if you will. And then I'm wondering, like, what are like upcoming improvements within Solana's tech stack? I know they are like cooking on multiple fronts, including Alpenglow and so forth. Like, what is maybe like the 5-year vision for Solana? Also in terms of, I know many people don't like it, maybe in terms of TPS as well, if you want.
Yeah, I co-authored a blog post called like the Solana Roadmap or something to that effect. It was published on the Onza blog. And it was co-authored with Anatoly, Max, a lot of folks from Jito, 00, some other kind of core contributors to the Solana network and ecosystem. So we kind of walked through the roadmap in fairly good detail there. But if I were to summarize it here very quickly, I think about it in a few ways. Block times are going to come down. Right now, block times are 400 milliseconds. I think block times will be down in 5 years to probably 20 milliseconds plus or minus. So I think that's the first major thing. Second major thing is application controlled execution, meaning application developers will be able to specify how transactions should be ordered in a block, and will they have guaranteed cryptographic enforcement of that. This is probably most important for market making and for clubs, but I think will have an impact on prop AMMs. It will have an impact probably on liquidations, on oracles, other kinds of things of that nature. Certainly can take advantage of it. And then the third and probably most interesting is this idea of multiple concurrent leaders. Today, basically all of the major blockchains are single leader at any point in time, including Solana. and multiple concurrent leaders obviously is changing that. In 5 years' time, I'm pretty optimistic you'll have dozens, if not hundreds, of concurrent leaders. And the real benefit of that is there are a lot of validators on Ethereum and Solana that are known to be bad actors. And if you don't like that actor, well, right now, if that person's leader, you don't have a choice. You have to deal with them or you have to wait. But obviously, in a world with multiple concurrent leaders, you can just send your transaction somewhere else. And so it's very important for censorship resistance, for health of markets, and also for actually latency. If you observe an event in Singapore and the stock exchange is in New Jersey, which that's where NYSE and NASDAQ are, they're in New Jersey, it takes 100 milliseconds, 150 milliseconds to get from Singapore to New York. If you have a leader in Singapore, then you can get the transaction included in 1 millisecond. So it actually will improve latency for users, and latency for literally everyone all around the world at the same time, which again has never been a thing before. So I'm very, very excited about this kind of like technical vision of improving on basically reducing latency, improving transaction structuring and ordering intra-block, and then obviously having multiple, basically moving the network to the edge. I'm very excited about all of this.
Nice. Unfortunately, I missed your article, but we will link it in the description. Just brief question. We know in terms of valuation of Solana, a lot of forward-looking valuation models center around the revenue. Do you think block space will be commoditized at some point, or is there not a thing?
I'm sorry, what's the question, Dominic?
Do you think that block space will be commoditized at some point, or is that not a thing? Will we continue to?
For sure. Block space will continue to approach zero over time in cost. Not even a question.
How does that translate to valuation then, in your view?
Yeah, block space should be free. Paying for priorities should not be free.
Okay.
And so when people contest over, whenever there will always be contested state in financial markets. That's just naturally how financial markets will always work, and people will pay for priority access for hot state.
Okay, fair. Thanks.
And if you look at Solana today, 99% of the revenue is priority fees, not base fees. That's already true.
Nice. So now I want to quickly touch on the digital asset treasury topic. Dominic mentioned it before. You launched Forward Industries digital asset treasury company in September, and I heard you talk about this topic in another podcast where you mentioned that initially you were kind of skeptical towards DATs, and then over the summer you kind of changed your mind. In the end, you ended up putting down 25 million of your own money into Forward Industries. You also mentioned that the goal of Forward Industries is to basically become a fully on-chain operating company. You want to bring business operations on-chain. You also launched a zero-commission Solana validator using DoubleZero just a couple weeks back. So you really also want to contribute to the Solana ecosystem. And in combination with all that, it seems like that Wall Street is kind of underweight relative to Solana's fair market cap adjusted weighting, both in DATs and in the ETFs. So are you trying to build a more resilient DAT model going forward, or are you kind of doubling down on a fragile one? And what is your outlook for digital asset treasuries going forward?
Yeah, I'm super excited about the opportunity we have with Forward Industries. Look, our goal is to increase SOL per share for our shareholders, and we're doing that via a number of mechanisms. The first and the easiest is staking, of course. Today, we're staking the vast majority of our Solana. Or if we have an opportunity to redeploy the Solana, not staking, but at a higher yield, we are doing that as well, and we'll continue to do that. I think I think we actually published a press release this morning actually on our staking yield. I think beyond just staking, there's a lot of very interesting opportunities to tap into the Solana network itself in terms of DeFi. And you can deploy SOL into a bunch of different vaults on chain and earn a few hundred bips of incremental yield on top of the staking yield. We're not doing that just yet, but certainly is in our plans, and I think we'll be in a place to talk about it pretty soon. So we're trying to put our balance sheet to work so that we can earn as much revenue and profit for our shareholders as possible. The other really cool thing we can do is we're a publicly traded company, and we can tap into public credit markets. And so we're looking certainly to start borrowing dollars and then deploy those on chain as well. Again, today you can deploy dollars on chain in the 12 to 15% range, and we can borrow at a substantially lower rate than that. So there's a lot of ways that we can earn very, very healthy yield for our shareholders just by intelligently managing our balance sheet and without levering up. And so we certainly intend to do all of that. If there are opportunities to tap into capital markets in terms of ATMs, prefers other kinds of mechanisms, we certainly are evaluating those opportunities. But I consider those least interesting in terms of like the core of what Forward itself can do. Forward should be an active participant on the Solana network. It should make the network better. It should provide liquidity, and it should be able to produce profits for shareholders in doing all of that work.
Do you think the relative under allocation will resolve, and that more capital on a relative basis will flow into Solana DATs and ETFs, or maybe why is that right now?
Oh, absolutely. I mean, well, look, Solana ETFs today are effectively zero. That will change very soon. Once the government reopens, the Solana ETF should go live shortly thereafter. In terms of the DATs, I mean, look, I think it's just, Saylor and Tom Lee are two very distinct characters, and looks Saylor has a 5-year head start over the rest of us. So no surprise that he is where he is. Look, Tom Lee is just a very unique character. He's built a lot of trust over the last 20, 25 years. He's been going on TV for 25 years. And he's built a following of people who trust him and like him. So, good job for him. Don't have quite the same following, unfortunately, but I'm working on it.
Yeah, good luck. But honestly, I'm resonating with your view. I for instance, like listening to Tom Lee. It's really nice, and I understand why he has such a large following and why people believe in him. Maybe let's dive a little bit into like Solana and the competitive landscape. I'm wondering like how your view is looking like in terms of major institutions launching Ethereum Layer 2s, for instance, such as just recently Ant Group or Alipay. We have Robinhood announcing a Layer 2 with Arbitrum's tech stack. We have Deutsche basically doing that. Why are they choosing like to launch a Layer 2? I mean, there are some arguments. I'm just keen to see your view. And then maybe in contrast, why are others basically opting to launch just a sovereign L1 such as Tempo? I think just today we saw that even Dankred, one of the most important Ethereum researchers, is also now joining Tempo in their venture. So I'm keen to see like how does this play out maybe in the next couple of years. And then obviously there are like institutions such as Galaxy who opted to choose just to tokenize their shares straight on Solana, right? So there's all of these different kind of strategic directions, and I'm wondering like how does all of that make sense in the particular case?
Yeah. Look, everyone thinks it will be long-term more profitable to own their own foundation, which is why you see these people doing this stuff. I believe that statement is fundamentally incorrect. But it is obvious that is what is driving core behaviors. And look, I think we need to see some pretty high-profile failures before people stop doing that.
Yeah.
I do think we will see a lot of high-profile failures. Sony's L2, as far as I can tell, is total flop. We'll see what the Ant Group guys do, but I think you're probably reading too much into that. Is my kind of guess. We've seen a bunch of other corporate L2s not go very far. Even Coinbase is, Base. I think if you ask most people who work at Coinbase, I think they would tell you probably Base has substantially underperformed expectations.
Okay, so, interesting.
Certainly has underperformed my expectations. Yeah, look, people need to make the mistakes and then they'll stop. but not enough people have fallen on the ground yet. The other thing I think you'll realize, most of the corporates will realize, is even if their L2s or L1s are successful, it doesn't preclude Solana from being, like, they still have to support Solana. Like being Stripe and like not supporting Solana is just like dumb for Stripe. So it's not even like you can kill off these other things. And I think that if you look at the core of what blockchains are, they are shared global infrastructure. And if people are going to use shared global infrastructure, especially big competitive companies, I think they want to know that their competitors are not, they're not funneling profits to their direct competitors. And so being a genuinely neutral, credibly neutral system, I think is very important. And I don't yet think we've seen the pendulum swing back against those people. Is Adyen going to use Tempo? Like 0% chance. Is Square, Jack Dorsey's company, going to use Tempo? 0% chance. Are Visa and WorldPay and Fiserv and all of these guys going to use Tempo? Like 0% chance. And so we need to see the pendulum swing back a little, and I think that will change a lot of people's tunes very quickly.
Yeah, that's a cool take. Especially since, I mean, as you said, just choosing a certain strategy does not mean that you cannot be present on Solana as well. It's still permissionless and all of the good stuff that we get. And it's also cool to see, for instance, that many entities already gave up on private blockchains, for instance. They tried, it failed. What I maybe see in terms of Ant Group and Alipay has maybe some legs that we saw with BlackRock. They come with a different distribution channel, right? They already have these 1.4 billion users that use their digital payment infrastructure. So I'm keen to see if it pans out what you predict, or
I'll actually go further. I hope Ant Group tries to put all of their users on their L2, because I 100% probability the system is going to fall over and fail, and the gas fees are going to spike, and the system is going to be unusable. So I'm really looking forward to that happening. I think that will be the greatest marketing event in the history of Solana.
Okay, fair enough.
So please proceed.
Yeah. Thank you, Kyle. This was a pleasure to dive into your mental models. I guess the audience will also appreciate a lot your attendance here. We link everything according to Forward Industries, Multicoin, and your recent articles on the Solana roadmap. Was a pleasure to have you on the show.
Dominic, Luca, thanks so much for having me here. It was a pleasure to be.
Thank you, Kyle.
Thanks, guys.
Bye-bye.